Let's take it up a level maybe and look at the broader picture. So retail is undergoing a massive revolution. Sears really got hit with a 1-2 strike. And keep in mind there are two parts of this, Sears and Kmart. So the first was the advent of discount retailing in 1962, the same year when Target, Walmart, and Kmart began within a short period of each other. Keep in mind Kmart was one of those. This has been the several decades since then where discount retailing has been dominant. And Walmart and Target aren't doing too shabby. So the tale of Kmart is certainly a tale of a company that was not managed well and that could not compete. And keep in mind, it was bankrupt, Kmart, when Lambert bought it in 2004. So it wasn't exactly like tearing up the track, right? All right, now let's go to Sears. All right, Sears was, in fact, the Amazon of its age. It was the greatest company that retailing had ever seen, right? And it did go through some ups and downs since that 1962 period in fighting against the discount retailers. But then it got the second hit. That's when Amazon started about 25 years ago, right? Almost exactly 25 years ago, by the way. I think July is Amazon's 25th birthday. That'll be quite something, right? And so that's the second hit that it got. So, along the way, it's seen a lot of trials and tribulations. Martin did a great job. It did see some turnaround, as Mark mentioned, during that period. But the overriding picture was one of tremendous assault on this company. So in comes the money guy, right? And I think one thing we've learned is that, and Mark did allude to it, having money is one thing, but being able to run a company is another. And the smartest thing that hedge funds, activists, private guys can do is bring in great management who know the business and run it. And the two fundamental principles of retailing that were violated here were, one, comp sales do matter. There was a lot of talk at the time that this merger occurred back in 2005 that retailers are too focused on growing their sales if you focus on the bottom line. BS, right? If you lose the customer, you lost the game.
Especially when they're down for 11 years straight. Like 2 years, but yeah, after a while it starts to add up.
Comp store sales are the kingpin of retailing. And if you don't have it, you're gonna go out of business. Secondly, capital investments. There's a lot of talk about that at the time. Ed Lambert's a very smart man, by the way, but it doesn't mean this is all right, right? So capital investment, is high in retailing. And you say, oh, it doesn't generate good returns. Let's stop doing so much of that. Well, in this area, you have to do more capital investment than ever to make the stores great and the internet great in order to thrive, and that was violated.
To be fair, I mean, this was a high degree of difficulty to begin with. I mean, you would have had to brought in a management team that really knew what it was doing, that was willing to potentially face off against orthodoxies that had been in place for a long time in order to reposition
They needed the long
company.
ball, not the short ball. They had to go to massive transformation on the back of the catalog, on the back of the internet, to turn this into a company of the future instead of a company of the past. Just fixing the company of the past would be what happened at JCPenney, and what's happening today. That will not work, and they will follow in the Sears path.
Are they done donating share to others?
Sears?
Yeah.
There's no more share left.
That's my point.
There may be around $10 billion in sales if you could figure out what a run rate is after this liquidation. Even the smallest little bit, survive. It's nothing in the retail. It's absolutely nothing. You won't find it. I see penny shares are up a little bit today. I guess because they have a lot of the same malls, people think they'll get something. Well, their problems are a lot bigger than this.
So are you saying Sears, Toys R Us, next up? Are you calling JCPenney?
Yes.
Is that your prediction?
I think they've got 1 year to get something going, pennies. And if they don't, then they're going to have to go because they're shrinking too. If you look at what's happening there, and they've gone through a massive sort of liquidation.
Well, they tried. Remember Ron Johnson? I mean, that didn't go well at all.
Ron's a good friend. He had revolutionary. He tried to do the long game. He had revolutionary new ideas. The problem was the customer didn't want what he was selling, so that didn't work. So it has to work too. That's why it's a high degree of difficulty.